Oil prices rise amid increasing geopolitical tension in the Middle East. Brent crude in London is trading at over $114 a barrel. Experts say the increase is caused by growing tensions between Turkey and Syria. There are also increasing concerns of the prospects of both the EU and US economies. Analysts offer further warnings that sustained high oil prices risk hampering the growth of the global economy. Meanwhile, the Saudi oil minister said that his country would provide the market with all the oil it needs, but the international market ignored his remarks as oil prices continue to rise. The illegal sanctions against Iran's oil industry are a significant factor contributing to keeping oil prices high. Well, from Alabama, I'm joined by Mark Thornton, economic expert. Welcome to the program, sir. Mr. Thornton, the world economy is not doing well. That means there's less demand for oil. Still, prices are going up. What does that mean for major consumers, especially Western countries?
Well, of course, the higher prices act like a tax on consumers. Oil refined products have a limited inventory. When you have conditions where central banks are flooding the market for currency and you have tension in the Middle East, it's quite natural for prices to rise higher.
And of course, this lack of global growth and yet rising oil prices, what will we see happen in the foreseeable future to the economy?
Well, I'm actually thinking that oil prices should ultimately go lower, with growth in Europe turning negative, with low growth in the United States, and with lower growth rates in China and other Asian countries. That declining demand for oil should ultimately result in lower oil prices.
And what about Saudi Arabia's promise for catering to the world's needs for oil? How much would that affect?
It would have very little effect. I think the Saudis don't have the influence over the oil market that they once did. They're an ever increasingly small part of the overall export market.
Indeed. We'll leave it there for the time being. Many thanks to Mark Thornton, Senior Fellow with Ludwig von Mises Institute from Alabama. Thanks for your time there, sir.